Hello and welcome to A View from the IMF. I'm here with Adrian Orr, who is Governor of the Reserve Bank of New Zealand.
Greetings.
New Zealand has been suffering from some decline in business confidence. How likely is this going to result in cuts of interest rates?
Unlikely, in the sense that our view for interest rates is over the medium term. The business confidence has been a really interesting paradox for us because the underlying economic activity has been very strong, very robust, and businesses have taken fright around a lot of changes with a new government that's coming in. We haven't seen it translate into an investment change or a spending change as of yet, and so we're going to keep monetary policy in the expansionary position it is for quite some time.
The country is seeing some near-term price pressures. Is this a cause for concern?
You know, our number one task at the moment is to get actually inflation up, not down. So we do intend to see and expect to see, I should say, some one-off price pressures. Our exchange rate's fallen. We've got higher commodity prices in terms of our imports coming through, and there's some modest wage pressure that we hope builds momentum because we are still below our inflation target, and we will keep things stimulatory until that inflation pressures can rise. So what we don't want to see is the one-off price pressures become long-term inflation expectations, but we think the chances of that are low.
Finally, in the bank's annual report that was published recently, there was some talk around modifications to the internal systems. Can you talk me through some of the changes that have been put in place?
I've been the governor there for only 6 months now, and I have to say there's no stone left unturned at the moment. A lot of projects were started before I arrived, so it's about the digital transformation within the bank. Like in any company, the cloud is where we're headed. There's a renewal of our real-time gross settlements. We bank the banks, and we're upgrading all of our systems there. But also our legislation is under review, and we've shifted to a dual mandate where it's low and stable inflation as well as contributing to maximising sustainable employment. The decision-making committee, we are shifting to where we will have external members come and assist us on deciding where to put the official cash rate. And likewise, our legislation, we still regulate the banking system, not bank deposit taking, as well as the insurance framework. So everything's up. It's all positive. Operational independence remains the same. It's all about how do we resource and make sure our legislation and our systems are good for the future.
Okay, great. Thank you very much.
Thank you.